In 1997, during the year of the Hong Kong handover, Hong Kong was hit by the Asian financial crisis. Both the stock market and the real estate market were severely hit, and the economy experienced a recession, leading to a decrease in household consumption and the motivation to invest in firms. The economy started to stabilize in 1999. With the rise of the IT and the financial industries, the Hong Kong economy began to develop rapidly, with increases in employment and income. Everyone was optimistic about the economy. However, in the year 2000, Hong Kong's export and tourist industries fell, and with the SARS epidemic in 2003, the economy worsened once more. Within the span of 1 year, and following the implementation of the free travel policy, Hong Kong's economy also bounced back from the bottom. Although the Hong Kong economy has always grown in the long run, there have been different stages where its economic development has been in a constant cycle of rising and falling. Economists call this phenomenon the business cycle. The business cycle refers to the short-term fluctuations in real GDP within an economy's long-term trend. Generally, we can separate the cycle into 4 stages: peak, recession, trough, and recovery. An economy's growth rates of real GDP, unemployment, and inflation all change according to the different stages of the business cycle. When the business cycle is at its peak, real GDP is at its highest point in the business cycle, and household consumption and firm investment would also be at the highest point as the market is confident in the economy's performance. Meanwhile, the average price level and inflation rate would also be at their highest point due to the huge push from aggregate demand. At the same time, as the economy is in a very good state, most people are able to find a job, so the economy's unemployment rate is going to be at its lowest point, up to where nearly everyone is employed. After the peak stage, the economy will experience a recession, or named contraction, where the real GDP begins to fall. When the economy contracts, the market's willingness to consume decreases, and the goods and services that are produced by firms become unsaleable, so the average price level and inflation rate starts to fall. During economic recession, some firms might have to close down because of falling aggregate demand, while other firms might lay off employees to reduce operation costs, which increases the unemployment rate. If the economy remains in recession, the real GDP eventually will drop to the lowest point within a short period, and the economy will reach a trough. At this point, the market's aggregate demand for goods and services plummets, which also causes the general price level and inflation rate to drop drastically. Other than that, the increased closing of businesses and layoffs will pull the unemployment rate to its highest point. Lastly, after the trough, the economy begins to recover and the GDP grows back. This is when the economy enters an expansion stage, where the market has a renewed confidence in the economy, and both household consumption and firm investment increases, which pushes up the average price level and inflation rate. At the same time, the aggregate demand increases, which creates more job vacancies and decreases the unemployment rate. Every ending of a business cycle is also the beginning of the next business cycle. An economy's performance will always follow this pattern of peak, recession, trough, and recovery.